Module 4 deals with the analysis of business activity. Once a set of financial statements are prepared, obviously we want to use the information to make decisions. How is this done? Well, there's a number of analytical methods we can use. One is called horizontal analysis, where we view data over a period of time, typically 2 years, and see if there were changes in the income statement, balance sheet, statement of owner's equity. Or we can look at data in terms of a vertical analysis, where we take a financial statement and compare it to, for instance, in the income statement, net sales, and we'll compare that information over time. Or we'll look at the balance sheet vertically and look at total assets and compare all the assets on the balance sheet as a percentage of total assets and compare that information over time. There's also a variety of financial ratios that we can use that will indicate whether a company is solvent, namely they can pay their bills or can they pay their current obligations. We look at profitability analysis, gross profit margins, net profit margins, and we'll also look at a handful of other ratios associated with stockholders' equity. The end result of this analysis is the ability of an investor, a creditor, stockholder, or the business owners themselves to take a look at the business and make decisions based on objective financial information, namely two ways. Number one, we look at the historical information, as I said, using the horizontal, vertical, or ratio analysis. And then we'll also take that information and we'll compare it to industry standards. So there are a couple ways we can judge or value our company based on our history or also based on what's going on in the industry. Module 4 covers this in some detail, but we also take a closer look at this later on in the course.